Hi everyone, I am Jayasha and this is the third video of Basics of Stock Market. I hope that you have watched the previous two videos before coming to this one. Let's start with something interesting. So you decided to buy some shares of Reliance. Let's say you decided to buy 20 shares. So you open your Demat account and what you'll see on your screen is this. So like you can see on the screen, the prices of all the shares are changing, right? If I go to any particular share, let's say I go to HDFC Bank share, so you can see that the price is changing every second, right? Let me change this to 1 minute chart. Okay. So here you can see the price is changing every second, right? If I go to Tata Motors chart, there also you will see that the price is changing every second, right? Or even more frequently than that. Similarly, in this side of the screen, you can see the prices of all the stocks that I have added in this watch list, which I have named as Nifty. So I have added all the top companies of India in this, which are included in the Nifty. So you can see HDFC, Tata Motors, TCS, Reliance, Larsen and Toubro, right? ITC. So you can see that the prices are changing even more frequently than every second they are changing. You can see on the screen. Now the question here is that why is the price fluctuating every second? Why is it fluctuating every minute? Is it NSE and BSE who's changing these prices? Who decides the prices? The answer is demand and supply. Now let's say that I am going to buy a car, right? So when I am buying a car, someone else is selling his car, right? When I am buying the car, I want that the price at which I am buying that should be as low as possible. And the seller who is selling his car, he wants that the price should be as high as possible, right? But now here comes the concept of demand and supply. Right? Now if the demand for that share is more, many people are wanting to buy that share, so the price will increase. If many people are wanting to sell that share, there's some negative news about the share, the price will fall. As simple as that. I'm sure all of you are aware about the concept of demand and supply, right? If many people are wanting to buy and there are less number of people who are wanting to sell, so the price will increase. And the opposite, which is like the many people are willing to sell their shares, but there are no people who are willing to buy the shares. So in that case, the price will fall. Let's get back to the example of a car, right? Let's say that the car which you are going to buy is a limited edition, right? And now where you have gone to buy, that seller, the entire city has just one car because it's a limited edition, right? So now there's only one seller, and let's say that there are 10 people who have gathered to buy that share, buy that car, okay? So now let's say that the car owner is saying that, okay, I'm ready to sell this car at 50 lakh rupees. Now, because the demand for that car is so high and because that's a limited edition, so someone will say that, okay, you know what, I'm ready to buy at 51 lakh. Now some other people might feel that they are missing out on the car. So they'll say that, okay, he's ready to buy at 51 lakh, I'm ready to give 52 lakh, right? Now, because the demand for that car is so high, because it's a limited edition, so people are willing to pay more for it. So the price of the car is going on increasing, right? Now you can assume the opposite case, that there is only one person who is willing to buy the car, but there are many people who are willing to sell the car, right? Now the buyer says that, okay, I'm ready to buy at 50 lakh, but there are so many sellers, from whom should he buy? So now the sellers who are selling the car, they just want to get rid of the car because it's let's say it's a bad car. So someone will say, okay, you know what, I'll sell it for 49 lakh. I just want to get rid of the car. So the buyer will obviously buy for 49 lakh. Why will he pay 50 lakh, right? Someone else will say, okay, you can buy it for 48 lakh. Just take it from me, right? So in this way, if the demand for the car is not so good, but the supply is the supply for the car is too much, but the demand is not too much, so in that case, the price will fall, right? So same thing will happen for the share. Let's say there's some positive news about the company, that the company is setting up some plants for the foreign expansion, right? So that's a good news. The profits of the company will increase in the long term, right? So in this case, many people will want to buy the shares. So the demand for the shares will increase. So the price will also increase. And in the same way, let's say that there's some negative news about the company, like there's some fraud related to the company. So in that case, many people who had bought the shares previously, they will want to get rid of the shares. So in that case, there will be huge supply. People will be wanting to sell, but there will be no one who will be wanting to buy the shares of such a company in which fraud has happened, right? So in that case, the price will fall, right? Like I explained to you for the car example, the same logic you can apply here, right? So I hope you understood that how the price changes and why does it change, because the primary reason is demand and supply, right? Now, why that demand increases? There can be multiple reasons. There can be some news, there can be some other thing. But at the end, why the price changes is demand and supply. Why the demand increases, why the supply increases or decreases, there can be an n number of reasons, right? So in the old times, there was something known as open outcry. If you have seen some movies related to it, so people used to shout and using some hand signs, they used to tell that, okay, I want to buy 500 shares of Reliance, I want to buy 600 shares of this, I want to sell these many shares, right? But nowadays, everything is digital, right? So everyone is sitting at their home and trading through their phone, through their Demat account, right? So now the thing is, there are many people in the market. There are lakhs of people who are investing and trading daily in the Indian stock market, right? Now, someone wants to buy Reliance share, someone wants to sell Axis Bank share, someone wants to buy TCS shares, right? There are different number of people. But now we want to buy Reliance share. So let's focus on the people who are either they are wanting to buy Reliance or either they are wanting to sell Reliance, right? Now there will be different prices that they will be agreeing to do so, right? Let's assume that there are 1,000 people who are wanting to either sell or buy Reliance. Now some people will say that I want to buy at 600 and okay, not Reliance prices around 2,500. So some people will say that I want to buy at 2,500. Some people will say that no, I want to buy at 2,480. Some people will say that I want to sell at 2,000 and 2,550. Right? There will be different people who will be willing to buy and sell at different prices. Now here is when demand and supply will come in, right? So if I am buying a share and someone else is selling their shares, the price needs to match, right? If I am saying that I am buying at 2,500, someone else needs to sell their shares at the same price. Then only the transaction will be successful, right? Now, the question is, which is the price which you see on the screen? That price is LTP. LTP means latest traded price, right? So now imagine that there are 1,000 people who are like some people are buying Reliance, some people are selling Reliance, right? Now the latest transaction which happened for Reliance shares out of those 1,000 people who are like trading in Reliance was at the latest traded price, right? So first, let's say that the price is 2,500 right now. The LTP is 2,500 right now. After that, the LTP changed to 2,505. Okay, so first it was 2,500, now it is 2,505, right? So the last transaction happened at 2,505. Someone bought Reliance shares at 2,505 and at the same time someone sold them, right? So this is the concept of latest traded price, which is LTP. So the price which you saw on the screen, which was constantly changing, that was LTP, because every second there are like many transactions which are happening. Now all of them will happen at a different price. It's not necessary that they will happen at the same price. In fact, most of them don't happen at the same price, right? So this is the reason the price keeps on constantly changing, right? So let's say that first a transaction happened between two of us where the price was 2,500. I bought, he sold. Then there was some other transaction for the same company, okay, Reliance. So there was a transaction between us first. Okay, for this, see, first of all, for the transaction, like I told you, the buyer and seller needs to agree at the same price, right? Now let's say that first a transaction happened between us for 2,500. Then the next very second there was some transaction for someone 2,505. Okay, after that let's say 2,508. Okay, so the LTP will keep on changing because like I told you, latest traded price. So the LTP will tell you that what is the latest transaction which happened, right? So if you see Reliance and the price, so the Reliance LTP will be that what is the latest transaction for which Reliance shares are bought and sold, right? So if Reliance LTP is 2,500, so the latest transaction which happened, in which Reliance shares are bought and sold, the transaction happened at 2,500 rupees per share. In this way, demand and supply works to increase and decrease the price, right? And remember that what I told you, that the price which you see on the screen, that is LTP, which is latest traded price. Now, let me show you this through a table called as market depth. So whenever you log into your Demat account, you can see this table called market depth, right? This will explain you the things in more detail and it will help you get a good understanding of what I just explained to you, right? Let me show this to you. Right. So I'm recording this from my phone right now. So what I previously showed you, that was the web version of Upstocks, and this is the Upstocks app. So it's the same watch list which I showed you, Nifty and all the same stocks. So let's go to Reliance. So this is what I wanted to show you. So you can see this table right here, market depth, and you can see that all the quantities and the bid ask on all the prices. So they are changing continuously. Okay, let me take a screenshot so that I can explain you. Okay, let's go to the screenshot. So on the left side, it is for the buyers, and on the right side, it is for the sellers, right? So bid is the price at which they are wanting to buy, and ask is for the sellers. So it is the price at which they are wanting to sell. So bid is like, you can understand it like a auction. So they are placing a bid that I want to buy it at this. And ask is something like someone is wanting to sell their shares of Reliance. Not someone, like there are many investors who are trading in the stock market, right? So now they are willing to they are willing to sell their shares of Reliance, but they are demanding these prices. So the name is ask. So on the left side, the prices which you see under the column of bid, those are called the bid prices, and under the ask, they are ask prices. And again, the quantity is the quantity which they are wanting to buy or to sell, depending upon which side of the column. So further down, you can see that it's written TBQ and TSQ. So TBQ is the total buy quantity and TSQ is the total sell quantity. So here you can correlate it to the same example of the car example which we took, right? So in that limited edition car, there were many buyers and there was only one seller. So the price increased. The seller demanded a higher price because he knew that there are so many buyers. So one buyer or the other will agree even if he quotes a higher price, right? And for the opposite case, you can consider that the bad car example. So even if there are so in the bad car example, there will be many sellers, but only one or two buyers, or basically less buyers and more sellers. So in that case, the price will decrease because since if applying the same logic, right? Now here you need to understand one term known as bid-ask spread. Okay, so bid-ask spread is the difference between the best buying price and the best selling price. So in this screenshot, you can see the best buying price is 2521. Why best buying price? Because it is the highest price. And 2521.5 on the right side is the best selling price. Why is it the best selling price? Because it is the least. So why do we call it best buying price and best selling price? So like I told you, if you are buying something, so you would usually want that, okay, I will pay as less as possible. And if you are selling something, so you will want that I will get I will demand as high a price as possible, right? So the best buying price and best selling price. So the concept here is that, like I told you, for the transaction to happen, the price needs to match. The buyer and seller needs to agree at the same price. So the bid price, the more higher it is, and the ask price more cheaper it is, there will be more chances of the transaction, the transaction to occur. So that's why the highest price in the bid side is called the best buying price, and the lowest price in the ask column is called the best selling price. And the difference between these two is the bid ask spread. So bid ask spread is basically, see, the best buying price means that what is the maximum people are willing to buy the shares of Reliance. So in this screenshot, the example is the 2521. So at most, someone is ready to give 2521 rupees for buying one share of Reliance. And if you see 2521.5 in the ask side, so what is the cheapest at which someone is willing to sell their shares of Reliance? That is 2521.5. So the difference of these two is bid ask spread, right? What is the highest price a buyer is willing to give for buying a share, and what is the lowest price a seller is willing to sell his share, and the difference of these two is the bid ask spread. So that was all about this video. I'll see you in the next one. Bye bye.